Even your teenage kid should file a tax return. I know it's hard to believe, but if your teenager is working, even part-time, he or she should absolutely file a tax return. I'm going to show you why now. So welcome to Heritage Planet Wealth Planning YouTube channel, my friends, the place you come to learn how to save money, reduce your taxes, increase your income, and get a comfortable retirement life. And I'm going to show you one way that gets overlooked a lot here today. So if you like what you see here, subscribe. That's that. Subscribe down below. There's a little red button. It looks kind of like that guy up there, but it's a little bit smaller actually. So just make sure you subscribe and then hit the bell to be notified for future content. We do a lot here today, or on the Heritage Wealth Planning YouTube channel. This might have been my my most fun most fun chapter to have written, because I just think this gets overlooked so much, and it brought me back. So talking to my daughter, she was working part-time at a retail shop during Christmas, and we're chatting, and she was actually making pretty good money. She was working part-time, and then she went to be as a hostess and even a server at a restaurant and making pretty good money for sure. And we got to chat, and I just said, hey, man, you got to make sure you file your tax return. And I gave her the story of when I was 16, 17 years old. And I played on football. I wasn't very good, but I played on the football team, so I knew some of the football guys. And this is an urban school, and some of these guys not only did I play football with, but they worked with me. And I used to work at a place called Chesapeake, not Chesapeake Bay Seafood House, but Chesapeake Crab House, right on Georgia Ave in Maryland, Silver Spring, Maryland. Actually, Sugar Ray Leonard used to go there. That was his claim to fame. That place was awesome. Anyway, so some of the guys I worked with down there, a couple of the football guys that do their taxes. And it's always amazing to them that they would get money back. And here's how it works, my friends. So if you have an income, all right, you're going to get a standard deduction. That's a fact. You're going to get a standard deduction if you have an income. I don't care if you're a teenager or if you're 98 years old, you're going to get a standard deduction. Now, what happens when you're working, though, is that a lot of times, and they're supposed to, they're going to withhold not just FICA, but they're going to withhold state and federal taxes as well. Now, if you fill out your W-4 where you don't withhold anything, you can do that. I don't think many people do that, frankly. So I have a feeling the vast majority of teens do not know how to fill out their W-4, or when they do, they just default to have taxes withheld. All right, so what happens now? And I'm going to show you this an example here in a second. Let's say you have, let's just go over this. So actually, I'm going to share with you. So let's say you have income of $10,000, all right, and they withheld $300 in taxes. Now, again, not FICA. That's your Social Security and Medicare tax, but this is your income taxes. So you have $10,000 of income. They withheld $300 in taxes, your teen. Now, what happens is they fill out their taxes and they have $12,000 of standard deduction, because individuals have under the age of 65 have a $12,000 standard deduction. All right. So what happens is they had no taxable income, but they had $300 withheld. That's just the feds. In Maryland, you've got to pay $80,000 in tax up there. So they get all that money back. They're entitled to it for absolutely. So let me give an example. That's the tax. So then on top of that, we're going to talk about Roth IRA as well. So you got to get your teen to file a tax, because unless they're making over $12,000, but even if they're making over $12,000, they're going to get that standard deduction still. And if they didn't fill out their W-4 right, and that's the form you fill out to tell you how much to withhold taxes, they're going to get most, if not all of that money back. Because even if they made $20,000, if they had $400, $500, $600 withheld, their taxable income in that case is only going to be $6,000. All right, so you can, and here's a question I get all the time. Josh, my 16-year-old son has a part-time job this summer. Can he open a Roth IRA? And the answer is absolutely, and he certainly should. It's a great strategy to give him money to open one based on the income he made. For instance, say he made $5,000 washing dishes over the summer, but he wants to spend some of that money. And you can't blame him. That's why I work. A way to reward him without just handing over the cash and say, I'm proud of you getting this job. And what I'm going to do, I'm going to put $5,000 up to your earned income into your Roth IRA. And you send a check of $5,000 to Vanguard, USA, Fidelity, wherever your custodian is, the folks who handle the money. So he gets his $5,000 to spend, and you put $5,000 in IRA in there. Absolutely 100% legit on the up and up. Now you're like, well, that might be a little bit too much. So I'm going to give you another way to incentivize your kid, not only to work, but to save money. All right, so on top of that, you say he made $5,000, but only wants to contribute $2,500 because he wants to spend the rest. And again, you can't blame him for that. In that case, you say every dollar you put into your Roth, we'll say $2,500, I will match it with $2,500 as well. So, son, you put $2,500, I will give you a check for $2,500 to send to your Roth custodian. Completely legit, completely on the up and up. He has $2,500 to spend, and he now has $5,000 going into his Roth IRA. No gift tax. You don't have to file anything. There's nothing to declare. It's completely legit as long as he had $5,000 of earned income. So the issue is as long as the kid had X amount of dollars of earned income, you can put X amount of dollars into the Roth IRA up to, I think the limit is $5,500. Yeah. So as long as he has $5,500 of income, as long as only $5,500 goes into that Roth, you're fine. It doesn't matter if you give it to him. Doesn't matter if he gives half. It doesn't matter. There's no gift tax. Nothing you have to declare. All right. So that's a wonderful strategy. Again, now he's got $5,000 in his tax-free account called the Roth. He got $2,500 to spend money. You say, man, you're doing great because you worked. You gave him incentive to go out there and work while his friends were just lounging around. It's a wonderful thing to do. It's easy as pie. Nothing to do. Now, hopefully your kid will continue to do this each year. So by the time he graduates, he'll have a nice little lump sum of money in there, tax-free, other than the gains. Remember, the principal is always tax-free. The gains are not until you have it open for 5 years and you're over 59.5. All right. Now here's what I talk about the tax return. The standard deduction is $12,000 for those under the age of 65, but it's much higher than most kids' earnings. So no tax is owed. But haven't filed a tax return anyway because his employer most likely withheld his tax from his income or tax from his paycheck. He will not get back his FICA, mind you, but there are benefits to reporting income, even paying the FICA as well, because remember, you need 40 quarters of earnings to qualify for 100% Social Security and Medicare benefits. You need 40 quarters, and essentially you get 4 quarters a year. Now, to get a quarter, you need roughly, I think it's $1,370. Yeah, let's just say $1,400. So every $1,400 in one calendar year gives you 1 quarter. So if your kid works $5,000, gets $5,000 of taxable income for which he had to pay Social Security and Medicare tax, that'd be almost 3 quarters. All right, and in fact, the nice thing about how Social Security benefits work is that if he just made, I don't know, $8,000 in one day, was selling Christmas trees and he had all kinds of commissions, made $8,000 in one day, he's done for the year for the 4 quarters. So you can get all 4 quarters in one day. I don't know if you knew that or not. But either way, you want to get those 40 quarters. And everyone says, it's not that big of a deal. It is, because as I showed you in other episodes, that amount gets indexed for inflation. The sooner you can get some numbers up on the board, some points on the board, essentially, the sooner you can start getting money indexed for inflation. That could be a big deal later on, especially like you're a stay-home mom. In your first couple of years, you work in a bakery shop or something like that, and then you stay home for 15, 20 years, so you don't make any money. Those first couple of years have a drastic impact on your Social Security. I mean, I've run the numbers. I've shown you in various videos to do that. So you want to do that for sure. Let's see. Oh, yeah, here we go. What if all he did was mow lawns and had no actual paycheck? You can still do the Roth, all right, and you can still file the taxes. You got to do a 1099. And 1099 means you got to pay self-employment tax. So it won't be 7.65. It'll be whatever that is, 15.3, because you're the employer and you're the employee as well. So if you have a 1099 income, you can still do the Roth. You can still file self-employment tax. You're probably not going to get any money back because you didn't withhold any money from yourself. So if you're a 1099 employee, now you got to wonder if it's worth it to file the taxes. Hey, I'm telling you, 1099 is not that big of a deal, but that'd be up to you to figure out, or your kid, in order to contribute to a Roth and to start to, again, get some numbers up on the board when it comes to Social Security and Medicare as well. That'd be up to you. But most likely, if you're a 1099 employee, you're not withholding taxes from yourself. So getting that money back, like I talked about at the beginning of this episode, is not going to be the same thing. How about my daughter who babysits? Same exact thing as the son who did mow lawns, or the son who babysits the girl mows lawns, whatever. Gender neutral, don't care. If you have no taxable income, a W-2 income is what I should be saying, is all 1099 because you're self-employed, essentially. A babysitter is self-employed, guy mowing lawns is self-employed. You'd have to fill out a 1099. And then you have to declare you got to pay FICA taxes of 15.3% on whatever money you made in order to get numbers in the Social Security system. And then you might have to pay some income tax. You're not gonna, because your standard deduction most likely will be higher than the amount of money you made as babysitting or mowing lawns. Because again, the standard deduction is $12,000. This is what I get all the time. I'm a dentist. Can I hire my kids to sit in a chair for a marketing picture or some variation of that? The answer is yeah, you absolutely can. But I absolutely urge caution here. The IRS isn't. They know what's going on, my friends. I mean, all these different things that, shenanigans that business owners think they can get away with. The IRS has seen all a million times a Sunday. And then why would you even want to mess with the IRS anyway? Now, it's completely legitimate if you actually are hiring your child to do labor for you. That's absolutely completely legitimate. And some of that labor could be, modeling their white teeth. I mean, it really absolutely could be. Then again, you got to put them on you got to pay taxes. So you have to put them on the payroll. You got to have taxes withheld. You got to, the 7.65 you got to pay, the 7.65 they have to pay. All that stuff has to come into consideration. And you can do all that. It's absolutely legitimate. And you can do that. And then you can fund a Roth IRA for your kid. There's nothing absolutely wrong with that in the least. It's just you have to do it if you want the IRS to check the box that is legit. And I just tell you, I'm without question, I'm okay with that. But I know people who do it. Well, I don't know people. I know of people who have done that where it's not quite as well on the up and up as it should be. No FICA taxes withheld. And then they're doing Roth IRAs. And you're like, well, where's your earned income? If you have no earned income, and how do we define earned income? You have to pay tax on it. If you have no earned income, don't do this. Just don't. You have to declare it. You have to pay tax on it. You have to pay FICA. If you don't have that, then you should not use your kid as a modeling perspective. And then if I say, I just don't think it's worth the risk of doing this kind of thing to have your kid out there modeling without declaring for FICA and whatnot. I just don't think it's worth it for a $5,000 IRA or Roth IRA. So if you're doing all the proper paperwork that goes with hiring an employee, but man, absolutely. But if you're not doing that, I would steer clear from that. So I hope this helps. I love this one. And again, if you have teenage kids and they're not filing their taxes and they're working for an employer, again, over the summertime, over Christmas, and their employer's withholding money, that's real money they get back. I'm telling you, if they pay $300 in taxes and they only have $10,000 in income, they'll get that $300 back. They won't get their FICA back, but they will get that $300. So take advantage of it. Don't let that money just walk away because it's yours or it's your kids, and they should do that. Hope you liked the episode. Hope this helps, my friends. If you like it, don't forget to subscribe. You'll see the little red button down there, so please subscribe. That's chapter 15 of the book, chapter 15. The book is free on Kindle Unlimited. If you go to heritagewealthplanning.com, you'll get the pop-up, and you can get the book for free on the PDF. It is the paperback is $5.99 on Amazon, so you just go to Amazon and type Josh Scanlon, and then it's $4.49 for the Kindle version. And I'm telling you, if you bought this puppy and did not save $4.49 in taxes, I would be amazed. So, it's worth the risk, in my opinion. $5.99 for the hard copy, $4.49 for the Kindle, because I really believe you're going to save well more than that in taxes. So that's up to you to figure out, but definitely get the book for sure. So don't forget to subscribe, comments, thumbs up, all that stuff helps me because it tells YouTube that people actually like the content on the channel, and that YouTube will then say, we're going to show this to other people. And I tell you, the more people see it, the more it's shown, and the more that helps me to more do this stuff. So if you like this stuff, thumbs up are always helpful, my friends, and comments too. I'd love to hear your comments. So comment away, and we'll see you next time on the Heritage Wealth Planning YouTube channel. Thanks, guys.